Hi, how's everybody doing today? This is Rich here on behalf of Rich TV Live with our very special guest, many time guest, John from Delta 9 Cannabis. How you doing today, John?
I'm well, Rich. Thank you for having me.
Thank you for being here. We've been talking quite a bit over the last little while, and you guys have been doing a lot of great work. So, why don't we kind of get into some of the things that you've done recently? Can you tell our audience a bit about Delta 9's strategic approach in doing business?
Yeah, absolutely. So, just to remind the audience, for those who aren't familiar, we take a diversified approach to the cannabis space. So, three very unique business elements. Firstly, the licensed Health Canada cultivation, processing, wholesale side of our business, where we're producing products, manufacturing consumer packaged goods products, distributing those across currently all of Western Canada. Looking to bring on additional provincial markets, kind of as our supply capacity is coming online here, toward our ultimate goal of becoming a national distributor. We are a licensed retailer, currently operating 4 cannabis stores in our footprint, 3 stores that are ready to open in the very near future, with a goal to build out about an additional 12 stores over the next 24 months. So, again, toward the goal of being a national chain of Delta 9 branded cannabis stores. And then the really unique part of the story, what we call our B2B segment, our business to business segment, where we sell our proprietary growing platform. We provide consulting and licensing services, and we sell cannabis genetics to other cannabis companies as well. So, kind of gives people exposure then to the more picks and shovels and infrastructure side of the industry. But I feel it's very important to emphasize that diversified approach. We've seen the success. We've seen the volatility, the uncertainty in the cannabis market. We've seen the difficulties that other companies are running into in a crowded wholesale environment. That's where the strength in our retail and our B2B segments has been really very important for us. But what we're demonstrating quarter over quarter is positive improvements in our financial and operating results, and I think a lot of that hinges on that diversification strategy.
Yeah, it's incredible that you guys are moving in the right direction, especially with profitability. I mean, that is the name of the game right now in this sector. How is Delta 9's production unique compared to its peers?
Yeah, absolutely. So to go a little bit further into that proprietary growing methodology, we very different than a lot of our competitors, the big open warehouse, greenhouse spaces. We grow in small modular units that we call grow pods. So these are effectively retrofitted shipping containers. We take a standard 40-foot high cube container, install customized wall panels, electrical, lighting, HVAC, security systems. What we're left with is units that are modular, scalable, stackable within our warehouse space here. Feel there's a number of benefits to the pods. It gives us a very high level of control over the growing environment, allows us to customize that growing environment for each genetic strain of cannabis that we're growing. They're all a little bit different. They're all very unique. Really, a lot of the positioning here is to produce high quality products. So again, very different than the greenhouse, the outdoor producers that are more of a commoditized product, really looking to produce large scale biomass. We focus in on producing high quality, indoor, hydroponic, really call it that craft quality flower that demands a higher price point in the market. So becomes a lot of our focus is to be on the high quality side, but would emphasize as well that there's a built-in risk mitigation function here. We've heard the horror stories of the crop losses from a lot of the big players. Those big players now shuttering big greenhouse facilities kind of across the space. We've seen some of the errors in the business models around those big open grow areas as being quite difficult to manage. And conversely, these small compartmentalized units, these grow pods that we use, can effectively mitigate risk if there is an instance of contamination, infestation, pests, etc. It's very unlikely that that is going to spread throughout our entire facility and cause a systemic crop loss. So, as well as again that pivot to high quality, which I think is very important to protect against margin compression in a very competitive wholesale landscape. It's also very important for us to consider the risk mitigation functions that these grow pods bring. And further to that, I think there's an economic case to be made for these pods. We've seen that as we've scaled our production. We're at 297 grow pods in production right now,
Wow.
about 300 kilos annual production capacity. We've invested heavily in automation. We've seen our per gram production cost trend down. we've been consistently below $1 a gram in production costs for the last several quarters. So puts us in that low cost, but also high quality segment. Again, very unique take on the cannabis space from the cultivation side of our business.
Wow, you guys are doing incredible. Now, it all comes down to revenue, so let's talk about it. Can you give us a high level overview of your recent year end Q1 results?
Yeah, absolutely. So, I mean, to talk through our Q1, very high level. So this is for the period ending March 31st this year. Company produced 11.75 million in top line revenues. That was an increase of about 110% from the previous year, from about 5.6 million in 2019, and an increase of 11% sequentially from the fourth quarter last year of a little over 10 million. So not only very positive results year over year, which of course we point to, but also very positive results on a quarter over quarter basis versus the fourth quarter. When we look at the revenue segmentation, what were we able to produce from these three main business segments? We're looking at about 3 million in revenue from our cultivation and wholesale business. That was a significant uptick from the fourth quarter of about 1.45 million. So more than doubled our wholesale business quarter over quarter. Solid rebound in total grams sold. Average selling price ticking up in the quarter, and that's in spite of a very difficult wholesale market environment. So very positive result from our wholesale business. Our retail business continues to chug along, 5.8 million in top line revenue. All same store sales growth, excellent growth from all of our stores in the quarter. And you have to consider as well that this is a first quarter versus a fourth quarter of about 5 million. So great increase quarter over quarter. And when many retailers would expect that actually your Q1 is probably going to take a step back from the Q4 with the holiday shopping season and that uptick in retail activity, to be posting a significant quarter over quarter increase in our retail business in Q1 was quite significant. And as well, our B2B segment, about 3 million in revenue, that was down modestly from the fourth quarter, but would shine a light on that, for all of last year, we only did 6 million in revenue. So to do 3 million in just the first quarter this year is an excellent result. Again, all of that together giving us a result of 11.75 million in top line revenue for the first quarter. And of course, all of that having a large impact on the profitability components as well.
Wow, that's incredible growth. Congratulations. You guys are doing incredible. And nobody knows, guys. Like, this is the thing. Like, I want Delta 9 guys to be our community company. I've said this many times, guys. I'm going to say this again. When we find a company that's undervalued, underappreciated, underexposed, that's the ones that I want our community to sink our teeth into. And we just recently did it with Bex. We just recently did it with TOMZ. Why can't we do it with Delta 9? And we're going to talk about it further, why I believe Delta 9 has huge upside. Forget the fact that they're making money. Forget the fact that their revenue is growing in a pandemic. They're not making excuses. Like, there's a lot of companies coming out saying, oh, we could have done this, but there's the COVID-19. Or we could have done better, but there's the COVID-19. Or, oh, we could have done better, but, Health Canada, has this problem. I mean, this is what I've heard from so many companies. But despite that, John, the thing that I'm really impressed with you guys, you don't make any excuses. You guys just produce. And that's impressive for me. And I think that's the type of company that I want to put my money into. And I know our community is looking to put their money into. So I really believe, guys, that Delta 9 is a safe place to invest your money. Now, let's get into the details a little further. How is revenue shaping up next quarter? So anyone that's thinking about investing can think about what's going to come in the future. And how has your business been doing during this pandemic?
Yeah, so I'll just, let me finish on, some of the Q1 profitability components, and then I can speak a little bit to forward guidance. What are we doing through COVID? I know that's the burning question for a lot of investors is, what's going on through COVID-19. But, of course, great top line numbers for Q1. How did that affect, gross profit, gross profitability? How did that hit the bottom line? To finish that off for investors, gross profit for the quarter, 4.9 million. Up 170% from the same period the previous year. Sequential growth 51% over the fourth quarter last year. Gross margin improved to 42% from an average of 33% for every quarter last year. So very significant improvements, not only in top line revenue, but also improving profitability as we see that big uptick in our wholesale and our B2B businesses, which carry a very healthy profit margin for those businesses. Net income from operations, 2.9 million positive. That's versus a loss of 950,000 for the previous year. And that's up off of a modest operating profit of only about 450,000 for the fourth quarter. So significant improvement in profit from operations. Adjusted EBITDA, 1.65 million. The first quarter of positive adjusted EBITDA in the company's history. That's versus a loss of 2 million the previous year, and versus effectively a net neutral result for adjusted EBITDA for the fourth quarter. So we've now reached that inflection point. The company is producing positive adjusted EBITDA. I think it's important to note as well that if you consider the very few cannabis companies out there that are producing positive adjusted EBITDA, we are also one that's producing positive operating cash flow. It's important for the investors not only to consider that adjusted EBITDA figure. It's a non-GAAP metric. It's a little different how each company assesses it. We do consider adjusted EBITDA to be a very fair metric of the operating performance of our business. But operating cash flows for the first quarter were about 1.55 million. So the company also producing free cash flow from operations, which of course is an incredibly important metric for investors to be considering for businesses that are currently operating, especially in the cannabis space. Earnings per share of 2 cents a share for the company. It's something, again, very unique for the cannabis space to see positive EPS or to be able to speak to an EPS metric. So I think speaks to how undervalued the company is when we look at all of these income statement metrics. I would touch just briefly on the balance sheet before we get into the forward-looking and COVID. Company ended the quarter with a little over 6 million in cash. That was up from just under 6 million for the previous quarter, so improved the overall cash position. Working capital improved from just over 22 million to 23.9 million in working capital. So good amount of cash, a good amount of access to cash and liquidity through the company's balance sheet really emphasizes how strong our financial position is as of the end of the first quarter. But from there, happy to chat through the moving forward. I think we're uniquely positioned. We've been one of a few companies that's been able to operate continuously throughout COVID. We haven't closed our retail stores. We continue to make wholesale shipments across Western Canada. We continue to deliver grow pods across the country, work on consulting arrangements for Health Canada licensing services with all of these newly licensed operators. So, business continues. I don't want to say it's business as normal. Of course, there's a lot of health and safety precautions that have been implemented across the business to make sure that we're doing things safely, make sure that our employees are feeling safe when they're coming to work, make sure our customers are protected when they're coming into our retail stores. So really trying to do our part. Of course, we're trying to be good corporate citizens as well as a company that's fortunate enough to continue to operate. We've provided our frontline staff with what we call grateful pay, an increase in pay for our frontline staff of $2 an hour equivalent, as they're really working hard on the front lines to make sure our business continues to truck forward through this and take care of our customers and our communities. We've made donations of personal protective wear to our local provincial government here, getting that PPE into hospitals for our frontline healthcare workers. So really trying to do everything that we can to operate through this position to be very strong as a company on the other side. In terms of forward guidance, the company doesn't necessarily provide forward guidance to the market, especially during an uncertain time such as a global pandemic and what I can expect is going to be significant economic fallout. I don't know that we're quite to that point of providing formal guidance, but I would point to that the company, again, has maintained all of its businesses kind of throughout the pandemic, and we expect the Q2 results to be shaping up nicely as well and really demonstrating to the market that we continue to execute, continue to lead with strong results. As you said, Rich, we really do feel there's a lot of merit in letting the numbers tell the story.
Absolutely. Now, you did touch base on this supporting the frontline health workers fighting the COVID-19 pandemic by donating gloves. Can you tell us a little bit more about this initiative? You just kind of touched base on it. Can you tell us a little bit more what exactly you guys are doing?
Yeah, absolutely. So, as a Health Canada licensed business, of course, we are having to ensure that our operations here are conforming with good production, good manufacturing practices, producing products that are meeting those very stringent Health Canada restrictions for presence of mold, mildew, things like that. So a pretty standard industry practice is wearing personal protective wear, scrubs, coveralls, shoe coverings, gloves, masks, kind of the full assortment of PPE. Of course, we are not immune to challenges that all businesses are facing, whether that's staffing or whether that is supply chain issues, things like that. But by about, call it mid-April, we had a pretty good handle on our supply chain for all of these PPE elements. From there, started to be able to access a little bit of excess supply, really with an eye just simply to be donating gloves, masks, bouffants, shoe coverings, things like that to our provincial governments. So we've been able to make a few shipments now through to different charitable organizations and government-led initiatives to be distributing PPE throughout the province of Manitoba. Again, putting that PPE in the hands of those folks who need it most, who are battling on the healthcare side on the front lines. So, I think very fortunate, very proud of our team. And feeling very fortunate as a company to be someone that is able to do our part as a good corporate citizen through this.
Now, when I look at your market cap and I look at the market cap of cannabis companies and I compare them to the revenues that they produce and the revenues that you produce, it seems that Delta 9 is trading at 1x revenue and your peers are trading at between 5 to 10 times the revenue. Why is this?
That's a good question. I mean, I think so much, we look back the last few years in the cannabis space, we saw, way back in 2017, a lot of cannabis companies really being benchmarked on capacity or funded capacity from a dried flower perspective. From there and into 2018, a lot of expectations towards legalization, companies beginning to put out models, company valuations really starting to take a form around call it forward enterprise value to revenue or EV/EBITDA metrics, but all projected out into the future. Very little industry or market valuations were representative of actual financial results that companies were experiencing. 2019, as we're all familiar with the downturn in the cannabis market, it's been a very difficult 15 months for a lot of industry participants. We've now seen the boom and we've seen the crash. Now we're about to experience the reset. From here, moving forward, and more as we look out into the future, 1, 2, 3, 5 years in the cannabis space, companies will trade at conventional metrics to trailing earnings, to multiples to EPS, to multiples to revenue and earnings and EBITDA, as with any other industry. So more and more, I think we're going to start to see those companies that are performing really separating themselves from the pack from a share price perspective. I think that therein is the real opportunity. I certainly feel Delta 9's share price is undervalued in and around the 40 million market cap range. If we consider that the companies produce now, say, 2 cents a share in EPS for the first quarter, if we extrapolated that out over the next 3 to 4 quarters, for a company that over calendar year 2020 should produce between 8 and 10 cents in earnings per share. Now, any conventional metric is then going to see, I would think, a reasonable lift from the current share price to be matching up with that financial and operating performance. So, more and more the company is putting our best foot forward. Again, we're leading with strong financial results. I think investors that are tired or cautious of the bluster in the cannabis space. And, we have to consider that the cannabis space as a whole has a credibility issue. There's been underperformance. There's been missed expectations. There's been scandals. It's our job collectively now as an industry to reset that. And how do we reset that? We reset that by telling the market that we're going to do something and then going out and doing it. That's what our company has continued to do quarter over quarter. For investors that are looking for a company that has produced strong operating results, has now made that pivot to profitability, to positive EBITDA, positive cash flow from operations and EPS, I think there's a great opportunity at Delta.
You had a press release that came out yesterday. Can we touch base on that?
We did, yes. So strong off the quarter. Wanted to refresh really the whole look and feel of our investor relations platform on our website. We launched a new website, delta9.ca, give investors kind of a new look and feel. So really, it looks to highlight the three main business segments that we have, give people a very good rundown of all of those elements, give people access to all of the company's financial statements, management discussion analysis. You no longer need to go to CDAR to find all of these things. You can find it right there on our website in PDF. It's a few clicks away. Access to our upcoming AGM materials, circulars, proxy materials for our shareholder meetings. All of that, again, available and at your fingertips, as well as access to investor relations materials, chats, things like that. So gives people now, I think, a much needed updated platform to be considering investing in Delta 9. It's all of that information that you will need to make an educated decision on whether or not to buy the company's stock.
Now, before we went live, we were talking a little bit about Canaccord, and Canaccord just put out a release. Can we talk a little bit about that and what they put as your price target and why?
Yeah, for sure. So, I mean, end of last year, I think Canaccord reset their entire coverage universe. So, all on one day, they effectively downgraded, I think, every stock in the sector that they have initiated coverage on, placed new pricing targets, got conservative, really got on the other side of it where historically there's been, inflated price targets for firms. They wanted to be realistic. What they were trying to show investors is that they're leaving it up to companies to be performing. Since then, there's been very little activity from Canaccord from an analyst coverage perspective. Of course, they're updating their commentary quarter over quarter and through this latest earnings season. I think we would point to it being significant. Yesterday's announcement from Canaccord that they have increased their pricing target on Delta 9 now to 75 cents a share from 60 cents, so a notable increase in their price target. They've also upgraded the outlook on the stock to a speculative buy from a hold. So really, I think a good indication that the company is continuing to produce strong results. They pointed to all of this in their analyst report. It's available if you contact Canaccord and their research department. It's available through our investor relations department if you contact us directly. I think, again, it is good to have that independent research that people can look to as a part of their due diligence in terms of making an assessment of firms. A lot goes into these research models, so it's interesting to see the company's performance, how that is stacking up against analyst results, and I think this is a good reflection that in Q1 this year we were able to beat on revenue, beat on adjusted EBITDA, really demonstrate to analysts in the market that we're here and we mean business.
You guys are doing incredible things. I got a couple questions here from the audience, if you don't mind me asking.
Please.
This is from Dylan Fraser. Are you guys looking to do any mergers and acquisitions, or are you looking into any merger acquisition opportunities?
Yeah, absolutely. So, I mean, we're currently in the throes of closing on our what we call our Modern Leaf transaction in Alberta. We're acquiring 2 stores that were licensed in the province of Alberta. It's been, I want to say, a tough road to get that transaction closed. A lot of regulatory approvals required in the province of Alberta, a lengthy organizational due diligence process. But we feel confident that transaction will close in, I would think, within the second quarter here. So before the end of June, it'll give us our first 2 stores in the province of Alberta. At that point, we will be cleared through that organizational due diligence process in Alberta. It means that any subsequent acquisitions in that province will go much smoother. Closing time can be a lot quicker if we don't have to keep going through that organizational due diligence process. So, really wanted to get our feet wet, start to expand that retail store footprint out west and into Alberta. I like the Alberta market as much as, many are pointing to it as saturated in terms of the number of retail stores. As a vertically integrated company, there's no company better situated to compete in the Alberta market than we are. We get in to these markets. We consider location strategy is very important. We're the price leader. We're very often coming to market with consumer products that are priced at a discount to other standalone retailers in the market. Obviously, price is very important factor in terms of customers and producing a positive value proposition for cannabis consumers in these provinces. So, we can get into that market. We can be very competitive. This was our first step. We will certainly be considering acquisitions on the retail side of the business, particularly. We are looking at a few assets on the cultivation side. I don't think we're looking to overpay for any of these assets. There's a lot of cultivation capacity that is available in the industry right now. But, I think through this shakeout that we've already seen the last few months, that we're continuing to see, there will be a lot of opportunity for companies that are positioned with a strong balance sheet, that are executing, producing positive cash flow to make accretive acquisitions that continue to grow the business. So, there's a good amount of opportunity to look at acquisitions for us. And as well, there's the other side of the picture to consider in terms of Delta 9 being acquired. I think incredible arbitrage opportunity for investors when you consider just how valuable a Delta 9 would be to, say, a Kronos or an Afria of the industry, given the results that we're producing versus our current market cap. I think we actually outproduced Kronos on Q1 revenue, even though they have a few $billion market cap. So, that we're certainly and obviously looking to maximize value for investors. If there are offers that come in to the company, we would obviously consider those very closely. But definitely, I think there'll be an increase in M&A activity now that we've seen a little bit of call it stabilizing forces in the cannabis sector in the last week or two, and starting to see an uptick in financing activity. I think M&A likely to follow through the summer here.
That's great. Now, another question from Samuel. Will they be getting into producing cannabis beverages? Is that something you guys are interested in?
Beverages, yeah. So it's something that we looked at. We had a partnership. This goes back to, I want to say 2017, 2018 with Fort Garry Brewing Company. It's a local brewery here in Manitoba, the largest craft brewery in Manitoba. The initial phase of the joint venture was actually to launch a hemp beer, which we launched with them in 2018, sold tens of thousands of units of Delta 9 Fort Garry legal lager. Now, this contained no active cannabinoids. This was a pre-legalization product sold strictly as an alcoholic beverage through liquor stores. But the forward look in that partnership was that we would start to get into cannabis-infused beverages. We actually did quite a bit of R&D with Fort Garry. Unfortunately, we saw the final regulations come out for the new cannabis regulations, and it stipulates that you cannot share facilities with other products such as beverage alcohol. So what that then meant is we couldn't leverage their existing facilities, their formulation and bottling facilities. We would have to build our own, get them licensed by Health Canada standalone, which is obviously very costly. And of course, through all this, we saw the real shakeout in the cannabis in terms of capital markets, the big downturn. And we consider as well that cannabis beverages, are only a very small percentage of established markets like Colorado, Washington, California, et cetera. So, for us, then we looked at a multi-million-dollar investment in getting into cannabis beverages versus the uncertain return. We pushed that project off, terminated our partnership with Fort Garry. And it's not to say we don't carry these beverages in our store. We've started to see the first canopy beverages launch in store. I would say there's a good amount of consumer demand that has been built up. A lot of people looking to try these beverages. But over the long term, there would be a large difference between beverage making up 1% or 2% or 5 or 10% of the overall cannabis market. So as we've stated for much of our 2.0 product strategy, we're going to go in slow. We've launched the full slate of these products through our retail stores. We're assessing the sell-through on these products, what's working, what's not working, where is the consumer uptake. It's really going to guide our CapEx decisions and our product decisions into the future as we start to see what of these categories consumers really start to gravitate towards. So, it's been too early. Beverages have not been well supplied in the market so far. I want to say it's going to be another 2-3 quarters before we have a good amount of information to go off of to say whether beverages are going to be a large impact category in cannabis.
That's great. Now, I have another question from Dylan Fraser. Notice that the share count is 85 million. Do you need any more dilution financing?
So, as we've spoken to, company is, I think well-financed, strong balance sheet, good amount of cash, and positive cash flow. So, when we feel that the company is undervalued, I would not say that today is the day that we're looking to run to the market to do a diluted financing. We've been very cautious over the years in terms of how we approach dilution. We're large shareholders ourselves. Management owns about 50% of the company. So we're very vested in the future of the company. No one dilution impacts no one more than our management team. So we're very cautious. We're always looking for non-dilutive opportunities. We have a with our bank, which is Canadian Western Bank. We have an $18.1 million credit facility with them, with untapped room on that credit facility as of the end of last quarter. So, I think in light of the company's current operating position, positive cash flow, et cetera, I don't see us doing any near-term financing unless there was an opportunity for some type of M&A activity, which perhaps share consideration would form part of. So, it's never off the table, but I think we would certainly be cautious in terms of dilutive financings moving forward.
One of our members, Jeff, asks, I own shares, but the price never moves even with all the positive numbers. Ask why. Any idea why? I mean, that's obviously why we're trying to talk about it, right? Because obviously we do believe it's undervalued, underappreciated, underexposed. Any idea why the interest isn't there yet with the shareholders to really get this thing moving?
Yeah, it's a good question. I mean, to us, it's a process. It certainly takes time. You build a good company, and good things will happen for shareholders. That has held true for every company in history. We look at markets over the short term; they're a voting machine. Over the long term, they're a weighing machine. We create a good company with strong revenue and earnings. The share price will make sense of it at the end of the day. I think to give you some more specific reasons beyond just the outlook long term, we feel is very positive. We look at cannabis. There's been a lot of stock promotion. There's been a lot of companies providing forward outlook, not necessarily meeting that, and painting a large picture of what's to come in the future without any tangible financial or operating results historically to really point to. We wanted to differentiate ourselves, be very different from the pack from that perspective. Now I think there's a good opportunity for us to continue to build that IR presence, start to do more outreach into the United States, really build that following of retail investors that starts to drive liquidity. As you improve liquidity, you improve visibility in terms of institutional investors. You now have the market cap to sustain institutional ownership, get them a little bit more involved. But I have to be realistic with investors in the cannabis space. The vast majority of daily trading volumes are made of retail investors and hedge funds with very little long institutional ownership, your mutual funds, your pension funds, things like that getting involved, simply due to the novel state of the industry. It's not been around for very long. Companies don't have an established track record for profitability. I was on with CIBC's cannabis analyst yesterday. He said, John, the main things holding your company back are liquidity, market cap, and profitability. You've checked one box. Now it's time to check the other two. I feel pretty good about our positioning, given we've now reached that inflection point. Now we can start to focus on things like investor relations, dealing with liquidity and the market cap.
And that's our opportunity, guys. Like, as investors, that's exactly what we're looking for. We're looking for companies that just haven't yet exploded, undervalued, underappreciated, underexposed, generating profits, moving in the right direction in a sector that's growing. I believe you're literally checking off every single box. And I love your answer. We don't want to promote the stock. We don't want to over promote. We're not going to say we have a Coca-Cola deal that never happens. We're not going to say that we're going to be profitable when we're not. This is what other companies have done, guys. And that's why you've seen them go up and then come crashing down, because shareholders feel like they were lied to or misled. Like Aurora Cannabis just did a reverse. A lot of investors got reversed out, right? So a lot of investors got really unhappy with that. Now Aurora is going back up, but it's been a roller coaster ride for their shareholders. You haven't had to do any of those things. You haven't had to put any of your shareholders through any of those pain thresholds, which I congratulate you for. And we even see companies going bankrupt now. More and more companies starting to file for bankruptcy, right? We've just seen CanTrust. Now they're filing for bankruptcy protection. We've seen Green Growth Brands filing for bankruptcy protection. These are companies that put out a lot of interest into the market, created, they were all over BNN. They were making, like, Green Growth Brands was trying to acquire Afria. People forget. They were trying to acquire Afria. Now they're bankrupt. So there's a lot of companies that try to make a lot of big moves, but they failed in those moves, right? They tried to make big moves to move mountains, and those moves failed. And you see what happened to those stocks. You guys didn't go for those big home runs. You guys have been hitting singles and doubles and singles and doubles. And now here you are, undervalued, underappreciated, underexposed, as a great buying opportunity for investors, as far as I'm concerned, perfectly positioned to make a move to $1. So as an investor, to get in at under 50 cents in Canada, guys, for this to go to $1, you're going to double your money. This is the perfect type of trade that we like to look for here in our community. How do we invest in a good company, doing the right things, not taking any crazy risks that could crater the stock, not diluting the stock to crater the stock and hurt shareholders, but instead focusing on growing the business the right way and building EBITDA. This is what every company should be trying to do. And the reality is, how many companies actually have a positive earning per share in Canada in the cannabis sector?
Ooh, maybe 3 or 4.
So you're one of 3 or
Elite
4.
crew. Yeah.
You're one of 3 or 4 in the whole country that can actually say that you have a positive earning per share, guys. So just think about that. So when you think of all the top companies in Canada, Delta 9 doesn't always come up to, it isn't the first name people think of, but we need to start bringing Delta 9's name into the conversation, because they're one of the few that can actually say they have a positive earning per share. So as an investor, this is what we look for. A company that's moving in the right direction, isn't taking any crazy risks, has a management that has a plan that is executing their plan, and has everything working for them except their share price hasn't exploded yet. That's essentially the story here, guys. This is why we're doing this, is so that we can tell the story and give everyone an opportunity to get in early before the stock jumps to $1 or $2, because I believe it will. And when it does, we're all going to be kicking ourselves, wishing, oh man, I wish I got into Delta 9 at 40 cents or 48 cents. This is our opportunity as shareholders. Now, let's get back to some of the questions here. From Jeff, who does he sell his shake to for concentrates?
Good question. We have done deals in the past with Oxley Cannabis. We have a long-term supply arrangement with them. That's to be extracted. It's formulated then into Oxley branded products, which we purchase back for sale through our retail stores. So that's I believe it's Dose Can, Foray, Collab branded cannabis gummies and chocolates. We're working with Westleaf Labs right now out of Calgary, providing them with biomass materials for extraction formulation into Delta 9 branded vape products. That'll be one of our first forays into Delta 9 branded 2.0 products. So look for those on the horizon as well. That's probably about the bulk of any extraction deals that we've done. We have sold some trim to one-off deals to extractors in Quebec, smaller extractors in Alberta who are just starting up now. I do have probably a few hundred kilos of trim available if you'd like to buy it. I mean, assuming he's licensed.
Awesome. Have you ever had to change your model due to everything that's changed here because of COVID? Or are you guys just business as usual?
Again, I don't want to say business as usual. I think this has changed the landscape for everyone. Again, certainly not immune to the challenges that people are encountering. But, for us, again, I think very fortunate. Once we started to have several provinces in Canada declaring cannabis businesses, both the cultivation, the manufacturing side, and the retail as essential, gave us a degree of, I guess, certainty that our businesses would not be facing closed doors, where you really start to now get into that distressed situation of, tapping into the government resource programs, laying off staff, all of those very negative outcomes. So, feel we're very fortunate to not have landed in those positions. Actually, if anything, we've seen a strong uptick in our retail stores. Foot traffic has increased. Actually, average cart size has increased. It seems that people are consuming more cannabis COVID. And not just the in-store, actually, the online business as well is surging. It's up about fourfold from the pre-pandemic. Obviously, more people are looking now for home delivery,
Yes.
same-day delivery, click and collect, or touchless click and collect options where they don't need to come into contact with people. So there have actually been elements of our business which have been quite positively affected. I don't want to be too bullish on the situation. Obviously, this is a very difficult situation for many Canadians. Unemployment surging. There will be very certainly be economic fallout, but I think we've started to see, call it the leading edge of the cannabis, as with beverage alcohol and a few other sectors, seems to be recession or downturn resistant. At least again in the early phase here, but again, very fortunate from our end that there hasn't been any material effect to our business to date.
There's a question here from Dylan Fraser. Do you have any value products coming, like the $100 ounce that people are all trying to get involved with now?
Yes, we do. So the $100 ounce, actually, we're working on a product that we're calling 14. So it's a product which will have a THC content around 14%, 14-gram setting, so a half ounce. And the intent is for that to retail at between $4 and $5 a gram.
Wow, that's good.
And that will probably be another few months before we launch that product. Our first kick into, call it, these value products is going to be a little bit different. We will be starting that June 1st. It'll start here in Manitoba, and then we'll be pushing it out west to Alberta, BC, and Saskatchewan. It'll essentially be about 4 or 5 SKUs of our products at between the 10 and 14% THC range, as well as a CBD inclusive product in 3.5 and 7-gram settings. We're really positioning the wholesale pricing for these products so that they can retail for between $5 and $6. And a lot of the thought process here is that, it's nice that these companies are putting out the cheap ounces or the cheap half ounces, things like that. But, at the end of the day, you're still coming into a store and out of pocket, maybe $75 to $150 on the high end. That's a lot of cash to be parting with. Our thoughts is, we see a lot more consumers that want to see the 3.5, 7-gram, even 1 gram. Now, it's tough to discount a 1-gram setting given the packaging costs. But, if I can take a 3.5-gram setting and have it come in and retail at $5 to $6, you can come into my retail store with a $20 bill and walk out with 3.5 grams of cannabis. So, at that point, we're starting to get pretty competitive with black market pricing. We're starting to eliminate some of those concerns that a lot of people have had over the last few years, that the pricing in the legal industry just is not what it should be. So as much as we will be rolling out those larger volume settings, which is great for us as a retailer, it increases size, we are going to throw in those value SKUs at lower price points. And really, I'm anticipating we're going to see a lot of volume in those. We see people, they're coming into our stores, they will buy those value products, but they're usually also buying some of the higher price point product as well. They want to have a good mix. So it will be interesting to see with the introduction of these value brands, just what an impact that has on people's overall purchasing patterns. But we will very definitely be involved in that segment.
Yeah, I think that what you'll see with those situations is it'll increase your overall revenue, but it's not going to increase your bottom line profitability because you're not making as much on those products. So this is the thing people have to understand. It's like they can't sell all value products because they're not going to make any money. And if you hear what John's saying is they're making good money on what they're selling right now. So they don't really need to do a value product, but he's going to because he wants to be competitive and he wants to offer it to his customers. Is that kind of what you're trying to say?
Yeah, it'll impact the margin certainly, but you have to consider that. I think we've done a lot of hard work to get the production costs down. We run a very lean ship here. Again, production costs less than $1. It positions us well now to looking at these value products, even positioning them how we are. We will still be making a good margin, a margin that any manufacturer would look at and say, hey, that's pretty good. I just, of course, want to have that balance, that mix of then the mid-range and the high-quality products at $4, $5, $6 a gram in wholesale to balance out those products that you're selling for less than that. So, you want to have hey, I'd love to only have products that sell for $10 a gram in wholesale. That would be great. It's just a very small percentage of the market right now, kind of a very niche category in the super premium That's just not us. I mean, we're built to drive volume. We're ramping up production capacity aggressively here. So, I think we'll certainly be active though, and that is again something I point to our retail and say not only are we well positioned in that we're vertically integrated. If I can produce something for $1 and sell it for 5, I've made a lot of margin up and down the value chain. But also point to this as a factor where we've heard the feedback from consumers. We knew that value products would have good uptake. Now we're pivoting to be involved in that segment. So, speaks to the value of controlling retail, controlling distribution, really interacting with the consumers, getting that live feedback.
Looks as though there's a lot of really good interest from the members here in the company, and looks like there's quite a few people that already hold your stock, and some people are talking about buying more. What do you think about what's going on right now in the cannabis sector? Some weird stuff's going on. I want to get your opinion on this. You're obviously in the business. Cannabis went from $6 to 5 cents. All of a sudden, they trade like 30 million shares out of nowhere, and the stock explodes when we thought they were going to go bankrupt or potentially go out of business. All of a sudden, they've got life again, and the stock's trading crazy volume. I see the same thing with T-God. I see some stocks that are just kind of coming back from the dead. What do you think that is? Is that shorts covering? Is that institutions now saying, hey, they're just way too cheap, let's buy them now? Is that retail buying at the bottom? Like, what do you think that is? Or is that just, like you said, a reset and the cannabis sector kind of saying, okay, everyone, we were way too high, now we're just way too low, and it's time to go back up again, and it's the institutions that are essentially buying it up, and maybe a combination of the institutions are buying it with the retail and the shorts are covering, creating this massive volume. Because it's literally come out of nowhere, where it's like the volume has all of a sudden gone from like 2 million shares a day to 30 million shares a day. That's not normal trading. It can't just be retail or institutions or shorts. Do you have a theory on why this is happening?
I think you hit the nail on the head. I think it's kind of a culmination of a few factors. The Aurora, earnings last week seemed to be kind of the tipping off point. I think overall trading volumes for the space Friday last week kind of hit a point that they hadn't seen, for many months. Too early this week where we've seen, explosion in liquidity, as you pointed to, for a few names. I think it becomes then, you've got some short positions being closed out or covering. You start to get a few hedge funds that carry a lot of weight in the space, really start to go long on, some catalyst type events that have been announced in the last few days. From there's a rush of retail buying. Unfortunately, I don't think any of this is, good long institutional money. Again, your pension funds, your big sovereign wealth funds, your mutual funds that are getting into names because they believe that these names are truly undervalued, as much as they feel there's an opportunity to trade on the volatility, where these stocks have sufficient liquidity and you can see a 10 or 15% run up. If you're playing with, a few tens of millions of dollars, you made a good amount of money in one trading day.
Yeah.
As much as any retail investor can make that same amount of money trading with a few $1,000s. So, I think it's probably near-term excitement. It's a little bit of craziness. We always look to invest for the long term. I think, as you know, but you know what the nice part is, and in speaking with several of our investment banks this week, this has brought a lot of eyes back on the space. A few financings have gone through that are not just short covering. I think you look at T-God, Hexo, a few names in the space have completed financings this week. Now, they were structured, many of them at a discount, including warrants or units, things like that. So these are not necessarily high quality financings. They do come with a good amount of dilution. At the same time, they got done. And we've seen a good amount of financing activity in the last few days. So, you have to consider that financing activity does speak to relative strength in the space. And certainly a much different environment than we're operating in Q1 this year, where you saw Tilray do a steeply discounted offering with a make-whole provision on the warrants, which no one had ever seen before, extremely punitive to shareholders. Their stock got beat up like crazy as a result. You're starting to see now better classes of financing, we're not back to 2018
Yeah.
right now. It's nice to see some strength in the space. It's nice to see that through this earnings season, there have been a few shining lights of positive numbers, a few positive takeaways from different companies' earnings, and overall some strength in the cannabis stock market. So I'll take this as positive.
That's great. And MC, one of our members, is saying, breaking news, scientists believe cannabis could help prevent and treat coronavirus. This is another catalyst that could potentially be the reason why cannabis is doing well too. Like, what do you think about that? Like,
Well,
there's a lot.
I joked with
there's a lot of our members that smoke cannabis, and none of them have COVID. And I was like, wonder if that has something to do. Like, why is everybody? I don't know one person that smokes cannabis that has COVID. Just saying.
I joked with our marketing team a week or so ago that we should come out with a product and we'll call it the cure for COVID and press release it. And
oh gosh, don't do that.
We decided against it.
Smart.
No, I mean, who knows how much truth there is to that. I did read through the article when I saw it. I think as opposed to trying to position that there's some cannabis formulation or otherwise that is the cure or the treatment or otherwise, actually on the other side of our business, the B2B, the grow pod side, we've actually custom manufactured a grow pod with sterilization technology. So it acts as a large, essentially autoclave where you could put in PPE, you could put in equipment. So you can wheel one of these up to a hospital, sterilize the materials, and then take it off site. So we're kind of looking at other ways that we can innovate different technologies that we're already working with, and can that be useful, applicable? Is this something we could take across North America and drop these units off in different jurisdictions that could be useful to sterilize PPE or hospital equipment? Or as schools start to reopen, you're going to need to sterilize all of the desks and any surface that's possibly movable or cleanable. Is going to have to be done in an effective way. So, there's probably other ways that we can get involved. To do good, also to find business opportunities through this. But I am going to shy away from calling cannabis the cure, at least until I see a little bit more data from science.
Yeah, I think that's a smart move, and you don't want to start like we talked about. Being that the company that's going to start, promoting stuff they can't 100% back up. And that's how you get in trouble, right? And that's how we've seen companies like, Aurora talk about the Coca-Cola deal that never happened, right? Stuff like that. We don't, that's one of the reasons why I really like your company, in fact, John, because as an investor, nobody likes waking up to hear negative news. And nobody likes waking up to something that isn't true. And nobody likes waking up to something that, you thought was going to be, and then it's not. I like the fact that we've been doing this now for a few months. And you've always been very straight. You said, we're going to be slow and steady. We're going to do things the right way. We're going to focus on creating profitability. And now you're doing all of those things that you said. As one of the youngest CEOs in the entire sector, you're showing a lot of maturity. It's very impressive. As an investor...
We need a few more young CEOs in the space, apparently.
Yeah, exactly. It's kind of funny. That's interesting. It's like you show a lot of maturity as a business. For someone that's so young in this really exciting sector that was the hottest sector in the world, like not too long ago. It was literally like the hottest sector in the world. I remember going to TMX Money and having every single topic be cannabis. I remember maybe a year and a half ago when I would listen on the radio and they were saying it's a problem because nobody wants to invest in anything but cannabis. Nobody was investing in gold. Nobody was investing in tech. Nobody was investing in anything but cannabis. From like 2017 to 2000, almost 19, it was like, especially in Canada, it was cannabis. Everybody was invested in cannabis. It was all everyone was talking about. And now we've had this, what you call a reset. And it's funny, while this went down, gold went up, right? And you could see it perfectly. You could look at the gold stocks. They all screamed up. But before the gold stocks screamed up, they were dead. Well, guess what, guys? The cannabis stocks have gone through a tough time. They're going to come back. They did in 2017. They did in 2018. They did in 2019. And then they went down. Well, here we are in 2020. maybe this is the start of the resurrection. In fact, if you look at the Canadian market cap, if you go to marijuana index and you look at the Canadian market cap, it hit a low, I think it was March of like 97, and now the market cap is at over 220. So it's already bounced up over 100% since March, quietly, because people are so busy thinking about COVID and everything like that. They're not really paying attention to the details. But when you actually look at the chart of the cannabis sector, you will literally see that we've already doubled in the Canadian index over the last couple months. A lot of people don't realize that we've actually already doubled in the Canadian index over the last couple months. So congratulations on all your success, John. Do you have anything else you want to share with the community? We got 52 people watching right now. Anything else you want to leave with anyone that's watching before we say goodbye?
Would encourage investors to hop on our new investor webpage at invest.delta9.ca. Read through the materials, check out the latest financial results. Again, we feel that they really do tell the story. Encourage them to reach out to investor relations to ask questions. Become educated, do their due diligence, and of course, buy the stock.
Okay, guys. Now remember, Rich TV Live is strictly for education, entertainment purposes. Always do your due diligence. Always do your research before you invest in anything that we talk about here on Rich TV Live. And talk to your financial advisors. Ask them about Delta 9. Ask them. See what they say. If they do the due diligence and they do the research, chances are they're going to come back and say, I like it. Okay, guys, that's my opinion. I like it too. If you guys have any questions, if you guys would like to learn more, please comment down below in this video. Smash the like button. If you haven't subscribed, subscribe for more updates. This is Rich from Rich TV Live with John from Delta 9 Cannabis, one of the only few companies in all of Canada that can actually say they have a positive earning per share in the entire cannabis sector, despite the fact that they are priced the lowest out of all of those companies that can say that they have an earning per share. In my opinion, that means that this company is underappreciated, underexposed, undervalued when you compare it to its peers, trading at 1 times earnings. So the average company trades 5 times earnings, sometimes 10. Just multiply the price times 5. You're going to get a $2.50 share price. Times 10, you're going to get about a $4.80 share price. This is where I see Delta 9 going. That's just my opinion. Love to know your guys' opinion. Comment down below. John, have yourself a great day. Thank you for joining us again. And let's do this again soon, my friend.
Thanks, Rich.
Keep up all the great work. We'll talk to you soon. Cheers, guys.